for all the back and forth on crypto. Let's bring in BTIG's Jonathan Krinsky, and let's just start there. You're a technical analyst on Bitcoin and what the chart signal could happen next.
Hey, Sarah. So, yeah, Bitcoin set an impressive move, about a 25% rally from the June lows to the highs we saw, just a few days ago. And it had a bit of a ugly reversal over the weekend into Monday. So we think it probably pulls back to the breakout point, which is kind of 108 to 110,000.
Got it. So, and what do you do from there? Is that a buying opportunity?
It's when you're trying to think about one or two steps ahead, you want to see how it reacts to that support, right? I mean, if it pulls back and holds that, then it probably for a couple of days, that's probably a good buying opportunity, and it should. I mean, that's the thought being, it spent several months trying to break through that, and so it would be the odds do favor that holding as support on a pullback.
What about stocks, and particularly the relationship with Treasury yields? This time yesterday, I was here on the desk, and we actually saw the Dow and the S&P sort of crumble into the close as yields firmed up. Today, we're seeing the opposite. Stocks are supported, yields are moving south. Is that the key to whether this equity rally can continue?
Well, I think let's take a step back. Today is the 57th consecutive trading day where the S&P is going to close above its 20-day moving average. And believe it or not, that's the third longest streak going back the last 30 years. So it's, we're at a pretty impressive duration for just even a short-term pullback. If you think about, how hard that is, the 20-day moving average is rising, over 10 points a day. So, by definition, the market has to keep moving higher just to stay above it. So, that's the backdrop. It doesn't mean we have to have a big pullback, but I think a short-term shakeout, the clock is ticking. And then you add to that, a couple other cross-asset, as you mentioned. I think yields are always the rate of change rather than the absolute level. So if we're talking about 30 yields, for instance, the prior highs over the last year or so has been 5.15%. I think you would need to see a meaningful, break above that, probably to, 5.25, 5.30 in short fashion to really scare stocks. But it is a concern we're watching. You add to that the dollar, which has quietly been up 8 straight days. If you think about the correlation since the April bottom, it was a precipitous fall in the dollar that led to a pretty meaningful rally in stocks. So there's a pretty big inverse correlation right now between stocks and the dollar, and now the dollar has rallied for 8 straight days. So I think that again could be a headwind if that dollar rally continues.
So you're a little cautious here.
I think tactically you want to be a little cautious. We're also seeing sentiment is really done 180 degrees from where we were in April. Whether you look at the survey polls, whether you look at the transactional data, some of the prime brokerage data. Getting a bit frothy on the sentiment side, and then you also have, areas of the market that, the non-profitable tech stocks, for instance, are going a bit, a bit vertical, we'd say. And so there's some signs for short-term froth. Again, I don't think it has to be anything meaningful, but, just a garden variety pullback to kind of that 6,100 level makes sense to us here.
All right, Jonathan, not seeing it yet, but Jonathan Krinsky, you've been warned. BTIG, we appreciate it with the technical take on the markets.